Many physicians contact us because they're not sure where they are regarding achieving the retirement or financial freedom they want. They're not sure if they're doing what's necessary to get where they want to go. In today's video, we'll explain the 4 steps needed to successfully plan for a comfortable retirement or achieve the financial freedom to do whatever you've always wanted. We'll also explain the risks that make planning for retirement difficult and provide some options if you find that your retirement plan or your financial freedom plan says that you're not quite on track. Well, Jimmy, thank you very much for being with us today on Wealth Matters for Physicians.
No, thank you very much, Mike. I appreciate you guys having me here.
Well, today we're talking about how to successfully plan for retirement or one's financial freedom. So, Jimmy, what are the questions about retirement that physicians really want to know?
Sure. So whenever a physician comes our way, there's several questions that usually get asked. Things such as, how much do I need to have saved? Can I change my position or scale back? Is my portfolio in the right place? And really what that all tends to boil down to and focus in on is, am I okay? Do I have a plan in place?
So Jimmy, I know we talk a lot about 4 key steps to a retirement plan or to a successful retirement. What are the 4 key steps to a successful plan or retirement planning?
Sure, and the way I like to think about it is preparing for a trip. So the first point that you have is knowing where you're starting and what you're starting with. Mm-hmm. So knowing your starting point. Second point is know where you're going. Third part is be aware of the risks or kind of the speed bumps that can get in your way. And the fourth is actually getting started and putting the plan into action.
So let's talk about knowing where you're starting from. What exactly do you mean by that as it relates to retirement planning?
Sure. So in keeping with the preparation for a trip, it's knowing what you're traveling in, what kind of equipment you have, what kind of supplies you have. So that's knowing income streams that you may have, whether that's some side work that you may be continuing, Social Security, maybe even a pension, knowing what the expenses can be going into it. So again, I like to think of that as almost like your miles per gallon. How much is going to be coming out as you go through into retirement? And also, the assets are going to kind of be your fuel source. That's really what you have in the tank to get you going. So knowing all of those pieces, even knowing who's coming with you. Are you planning for you and a wife? You have kids leaving the house. Maybe you have someone that you take care of, that whether it's a parent or it's a child that may be living with you for a long time. It's kind of knowing all of those pieces before you start out on your drive.
Right, and you also want to be aware of any liabilities, right?
Absolutely. So are there still mortgages in place? Are there still loans that might need to get repaid? Is that something that needs to happen before you leave, or is that something you can continue on when you go? All of that is kind of knowing where your starting point is.
Thank you very much. So let's talk about your destination. What do you want our physicians to know about here?
Sure. And to go with it, it's kind of like someone saying, hey, where do you want to go on vacation? And answering, well, I just want to go on a vacation. And if you start getting into specifics, whether you're a person that wants to go to a big city, a cabin in the woods, or a beach, that's a very different
vacation.
Situation.
Right?
It's a different vacation, and you know what? Not everybody likes the same places. So I think a lot of people start approaching retirement thinking it's retirement. It's a concept. But actually looking at those specifics and what those destinations might be, I think are very important. And again, that can go into areas of knowing whether you're going to stay in your home, whether you may want to change and retire to a different state, whether you may be, again, you need to care for someone in retirement or prepare for your own care in retirement, or whether you're concerned about maybe leaving a legacy on top of just taking care of yourself. All of those specifics are really important because it's going to shape how you actually put all those assets and things we talked about in the beginning on the right path to really get you where you want to go.
Right, and everyone has a different idea of what a fun and happy retirement is, right? So some people might want to travel a lot, which might create a lot of expense, which we need to plan for. And other people might say, I'm not really that interested in traveling, but I really want to garden in my garden. I like to do some volunteer work locally, and that might have a different expense structure.
Absolutely. I find you have some people that just want to maximize. They want to try to get the most out of whatever they're going to get in retirement. I have other people on the other end that are more, they want to protect on those risks. They're afraid of what might happen. So just having that approach and knowing what your key priorities are will really help line everything up in place.
Pausing here to thank you for watching Wealth Matters for Physicians by Altfest Personal Wealth Management, the channel that provides physicians with key investing and personal financial planning strategies. For over 40 years, physicians have relied on Altfest to help them achieve the financial independence and future they deserve. If you're wondering or concerned about your finances, let's talk and see if we might be able to help. And now back to the show. So Jimmy, in the beginning you said that you have to be aware of the risks to planning for a successful retirement. What are these risks?
Sure. So there's always individual risks, which are something that when you work with a planner like Altfest or anyone else, you get into, and they say there's always those risks, the unknown risks. Those can be tricky, but the starting point is know what risks that you're likely to run into. And there's three big ones that I think are worth preparing for, and I think preparing for them can even help you with some of the others. So one of the biggest is knowing how long you may live so you can really prepare for that full journey. The second is being aware of inflation, and it's a specific kind of economic risk that comes into play that again we see persisting, and we find a lot of individuals, especially doctors and physicians, don't really have at the top of their mind when they're getting started. And then the third piece that is a risk of just kind of knowing how those investments are going to go. We have the ups and downs of the market, knowing how you're going to react and you're going to navigate through what those investments are going to be doing on a day-to-day, week-to-week, even year-to-year basis.
So Jimmy, let's talk about the first risk. Can you flesh out a little bit more what you mean by longevity risk?
Absolutely, and I think we even have a slide to illustrate some of this we'll talk about. And so longevity risk for us in the profession is dealing with actually living too long. So as I was talking about before, knowing how long you might live, most people are concerned about something happening too soon, but what we want to make sure a retiree is prepared for is actually having a long life. And we think this is more and more important, especially for our physician clients, because what we tend to find is that individuals that work in a job like being a physician or a high medical position, they tend to live a little bit longer than most. You have good access to health care, you're well educated, have had a high paying job, so you're able to kind of take care of things. And if you actually look at the chart that we have here, going out to age 95, you can see there's a 20% chance that one person out of a couple is likely to live to. So if you have a 1 in 5 chance that either you or your spouse might be living into your mid-90s, that's certainly something that's worth preparing for, and not, again, going on this journey, fingers crossed that you're going to have enough fuel in the tank.
Thank you very much. So Jimmy, inflation risk. I mean, we always hear about inflation in the news and everything, but bottom line, why should physicians really care about inflation risk? I mean, you say you make a lot of money and everything's great, right?
Right, and it's interesting because like you said, in the news, I feel like there's been a lot of headlines on inflations lately. You're seeing a lot of big numbers. It always kind of makes me laugh to myself a little bit because, you go back 5 years and we really had to hit home points of taking a look at inflation. Less so now, but what I try and concentrate on are these big numbers that you see in the news, like a 5% or 8% in a year. That's not the real risk that we worry about. What we actually worry about is purchasing power risk. And that is the idea that even with little bits of inflation, normal inflation that we would expect to see is going to wear down what your assets can actually buy in the future. So again, if you have $1 million saved up and you can put some of that to work, it's throwing off some interest, dividends, and growth. What that's going to be able to pay for in and of itself today is going to be very, very much less than what it might be able to pay for 10, 15, or 20 years ago. And going back to that first point, if we're planning for a long life, we have to take inflation into consideration.
Right. I mean, it's amazing. You look at the cost of things, let's say 20 years ago, what was the cost of a stamp? What was the cost of a gallon of gasoline? What was the cost of a gallon of milk? So you can't just plan for, well, I have $1 million now and that's going to cover me because I know what $1 million buys now, exactly. But like you said, it's going to be significantly less going forward, especially over decades.
Absolutely, and it's pervasive through kind of all of those spending. So really, it builds upon itself. I mean, people have probably heard compound interest. It's great for investments. It can be detrimental on the expense side. So preparing for that is important, that you don't reach that further end in your retirement where, again, you have less options of what you can do and suddenly realize that, the dollar you have to spend can't get what you would expect the dollar to be able to buy.
So Jimmy, the third risk is knowing how our physicians' investments will do over time. That sounds very, very complicated. How can we make a good projection of how they'll turn out to grow?
Sure. No, that's a great question, and one of the reasons it's a hard risk, I think, for people to get their arms around, because again, if you look at a stock and how it can behave on a day-to-day basis, even in a short amount of time, you can have a lot of fluctuation up and down. So one of the things that we do is crafting a portfolio with input from the client of knowing what their risk preferences are, understanding their situation to balance that, to put together a portfolio that pairs well. And so what that does is we have expectations for different asset classes. So areas like domestic stocks, international stocks, and bonds, and finding a good diversified balance where there's not just different types of investments, but diversification that helps reduce overall risk in how they interact together is an important way of crafting a portfolio that you know can have what we call the best risk-adjusted return for what the client is looking for. So having that and having a long projected time horizon, which again I think folds into those other points we were talking about, are key to knowing that you can rely on a portfolio down the line. And again, there's some other statistical tools that are available to help get a good sense for how things can perform as we kind of put everything together.
Right, and we have very specific projected rates of return depending on the risk profile of our physician portfolio. So I know, like, for example, if a portfolio has, roughly speaking, a composition of 65% stock-based investments, 35% bond-based investments, we are projecting a long-term rate of return on average of about 6.82%. Now, every year it could be much higher, much lower, but over long periods of time, that's what we're expecting it to be.
Exactly.
So Jimmy, right now you've set the stage. Talked about where you are, where you want to go, the risks that we need to be aware of. So how does one put the plan together, or what do you want to educate our physician audience on how we take those inputs and create a plan and determine how successful it might be?
Sure. And this is, again, that's why I kind of have it as the fourth point of where everything comes together, because again, you can have all the data points, you can have all the knowledge. If you're not ready to act and really kind of know where your next step is, it's hard to get started. And sometimes that's where we can see people with the best of intentions kind of stall out. And so what we do when we're working with a physician, again, it's gathering all those details in the beginning, especially knowing a physician, the types of retirement plans they might have, whether they're selling a practice or taking a specific pension from a hospital, let's say, getting all that information, putting it together, and starting to project out. So again, we have specific software packages that we use that really kind of gets all this data. It allows the client to see exactly where everything is, and it allows us to help start doing those projections. So again, you can account for some of those major risks that we talked about. We know the destination where they are trying to go and what are the key goals they have that they want to make sure they hit. And again, the income, the expenses, and the investments, we know how those can behave now because we've put together a portfolio, we have those projections, and what we're able to do is really flesh out a whole detailed plan. And you can see that on a year-by-year basis down to the minute categories that we're looking at, and also have a big high-level summary. I had mentioned before some of the statistical analysis that we run through. What we will actually put the scenarios in the plan through is 1,000 different iterations of possibilities of where the investments can go based on the expectations that the clients has informed us about and what we know can happen down the road. And so we run through that and we can see what a successful plan would be, reaching a full retirement age into your mid to late 90s. And what we tend to like to see is that 90% or 900 of those 1,000 trials end up successful. Because again, you don't want to be too tight on your controls. You want to allow clients to be able to reach for their goals and not be too afraid. But having that all together really sets the stage. And it also allows us to make some adjustments along the way too.
Great. So we're saying run 1,000 scenarios, and each scenario is a way that your life could play out, granular year by year. And we want 90% of those 1,000 life scenarios, or 900, to be positive, meaning that you're able to achieve the goals that you want and also be able to live, hopefully, a long, happy, healthy retirement if it comes to that.
Exactly.
So, Jimmy, what happens if we run the plan, we develop the retirement plan in coordination with our physician client, we run it, and we see that the probability of success of that plan is less than 90%. What happens then?
Sure. So this is where it kind of goes to that point of looking and seeing what options can be taken and what's available. And one of the things that I love about having all of this information and really knowing all the different pieces is we can then look to our planning knowledge, both of what we've seen from working with other physicians and what we know has worked in the past with others, and be able to model out actual adjustments. So that might be anything from stretching out how long you're working to a little bit further along the line, or modeling a specific amount of part-time work that I know certain physicians like to kind of scale down as they go. It also allows us to model out changes to their savings that they might be doing. So of kind of adding a significant amount to a retirement saving plan to help on taxes in the meantime and get certain assets into tax-preferred buckets can have a big effect. A common thing that we'll do is run a different Social Security analysis to see when an optimal time might be to start taking Social Security. And oftentimes looking at these factors can kind of push a plan over the brink of not quite being secure or where we want to see it to being well into and above that 90% target.
Great, and also there you can be even more options. For example, if a physician couple owns like 2 properties, then maybe they might be open to selling one, maybe in their middle of their retirement, in order to free up that income and have that income pay for the second half of a potentially long retirement.
Absolutely, and that's why I like seeing the details, because you can kind of see, all right, if the assets look like they might be getting in trouble, when is that actually happening? Because I think sometimes people have a fear that something might not work out, but it's vague, and it's hard to kind of grasp. When you can get the numbers down and kind of run these analysis, you can see where things are tending to go wrong, and you can target to make an adjustment, such as selling a second property, and see when the best time might be, or when you can kind of really get that boost to make sure that you're going to have a secure future.
Great. And so once this plan is done, we communicate it to our physician clients, and let's say they're happy with it, it's 90% or higher. Is that it? Do you just like put it on the shelf and forget it? What happens then?
So luckily, once we have the bulk of this information, it's great because it's in the system that we can update. Some of that will update just automatically. So, all the investments that we manage for our clients are fed directly into that on a daily basis. So we're always getting fresh information there. We constantly keep in touch with our clients and help track them and manage things, because as you know, just because you're no longer working doesn't mean you don't have things in your life stop happening, whether it's unexpected things that might happen, or new plans and new goals that you develop as you're in retirement. So we're constantly refreshing this and wanting to get new input from their clients, what they're looking for, and sometimes even running possibilities. I know I had one client in retirement that was looking to actually buy a second home, but when you don't have an income, you can get a little bit nervous about laying out that much money as a down payment or for a purchase. So being able to run a scenario to see, all right, here's how you're doing now, here's how things would be if you decided to buy that second home, they can feel very, very confident in moving forward that they're still on a good path.
Right, I think that's very reassuring to our physicians in the audience, because physicians tend to want to be very specific, want to know, are they on track, are they not on track, what do they need to do to get on track, and then once they're on track, what they need to do to stay on track. And it's just like our physician clients, like many times, like if they'll be looking at, let's say, the vital signs of a patient that they're working on, and they want to know how can they get them to where they want to be in a health-wise, and then how do they maintain that. And that's the thing, is we're looking at financial metrics to make sure they're getting to their financial state that they want to be, and then how can they maintain that positive financial state.
Absolutely. And similarly, like in healthcare, if you have a good outlook into the future of where things can be, even if they don't look good, you can make small changes now that can have a big impact. So, having an ounce of prevention instead of, a pound of emergency care in the end. And that's what we like to work with our clients on, and make sure that they have a good understanding and a good grasp on where things are going.
Great. Yeah, no unpleasant surprises.
Exactly.
Yes. Well, that's all we have for today on planning for a successful retirement, or making a successful retirement plan. Jimmy, thank you so much for being with us today on Wealth Matters for Physicians. You've really given our physician audience a great deal of practical, helpful advice.
Well, thank you. I appreciate being able to come on and share some of what I know, and I hope it is helpful to anyone that was able to tune in and watch today.
If you'd like to discuss the information explained in today's video, receive a complimentary review of your investment portfolio or a retirement readiness analysis, or discuss any other personal financial planning area with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732 or by emailing Jesse at his email address, which is also in the description of today's video. If you like today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we release a new one. If you think that a fellow physician would find this video either interesting or useful, please feel free to share it with him or her to help them strengthen their finances. Lastly, as always, if you have topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you. So please give us your comments in the comments section below. Well, that's all for now, physicians. Thank you very, very much for being with us in today's video, and I look forward to being with you in our next one. Until then, be well, and remember to continuously optimize your finances, or let us help you if you'd like.